You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion. Delivered by conflicting media reports. We connect the dots, you know, the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. You know, I look at the celebrations today, and having beaten anorexia, there's a whole lot to celebrate. I'm looking at it, National Pancake Day. Where are you getting pancakes at? It's not IHOP Pancake Day. That's earlier in the year. So today's National Pancake Day. A little syrup on there. That's a serious stack of pancakes right there. That's not like it's just a little bit. National Pancake Day, National Dumpling Day. Oh, I should go back. The Lighthouse. If you ever want a great pancake, go to the Lighthouse on the Balboa Peninsula. They make a ricotta blueberry pancake. It's more of a dessert, but it's tremendous. And National Dumpling Day. Today's National Dumpling Day as well. I like dumplings. We get them at Costco. So that's a nice little, I'm sorry, not Costco. Trader Joe. Trader Joe. That's a good place to go get dumplings. Costco, you'd probably get enough to last you for about the next 6 lifetimes. I don't know. National Compliance Officer Day.
It is what it is.
Yeah. Situational Awareness Day. That should be every day. And I think this one's going to go away. Shamu the Whale Day. Now, there's so many claims of problems. I love taking the kids when they were little going down to SeaWorld to see Shamu. But I guess, as all good things, they come to an end in this day and age. Let's take a look and see what the markets are doing today. Do we want to look and see what the markets are doing today? The Dow Jones Industrial Average is down 303 points. The S&P 500 is down 50. The NASDAQ is down 171. Oil is up 80 cents a barrel.
Ow!
Not a good piece of news in that whole mess right there. Let's see, do we even want to know about gasoline prices? I don't know if I even want to take a look at this one because it does make me ill all the time listening to some of the news media coverage. Every place I was driving this weekend, though, I was seeing gas over $6 a gallon for regular unleaded. Over $6 a gallon. They're saying the statewide average is $5.84. Now, you know what the claim is going to be. A couple of the refineries had to close for maintenance. Yeah, right. As we pay more and more in taxes on that. Even, we remember about, what was it? Half a year ago, we were talking about Washington being more expensive than California. Now Washington is 80 cents a gallon cheaper than California. Think about that part of it. And let's see if we can take a look. I don't know if I've got it on here or not. A month ago, we were paying $5.27 a gallon. Today, we're at $5.84. Unbelievable how the prices are going. But the president will tell us, it doesn't matter. He just tried to stop some new drilling out in the Gulf of Mexico that was passed into law, signed by the president. But, they've got this fight against fossil fuel. Now, the president's going over to check on the United Auto Workers. Now, is that an oxymoron or what? United Auto Workers, number of the groups are on strike, and the president is going over there. Why is he going over there? Well, we know the answer to that, because if it wasn't for Donald Trump going there tomorrow at the same exact time as the Republican debate, do you think President Biden would have come out of his cave in Delaware to do anything other than go raise money somewhere? I'm just throwing that out there. It doesn't happen. But he's going to go see the United Auto Workers. I wonder what happens if Donald Trump goes down to the border. Do you think President Biden is then going to go to the border too? I doubt it.
You know better than that.
Yeah, he's not going to the border for anything. The only thing that's going on at the border is more and more people coming over the border illegally. And it fascinates me watching some of this, just because we've been watching all these people coming over the border illegally. And the more they come over illegally, the more they get shipped to Democrat states. And now all of a sudden, the Democrat states want the president to do something about it. They can't sustain. Well, what is the Democrat solution to almost everything? Throw more money at it. I'm just saying it is what it is, that it's not going to get solved by throwing more money at it unless the money is going to the border. And yes, several Republican governors are now calling a crisis, a national crisis on the border, and calling out the National Guard. It's going to be interesting to see what happens with that one, being that that's supposed to be something that's handled by the federal government, but they're not doing it. And it's costing you and me. Now, I get it that there's a lot of places, especially California, that like to have sanctuary states. But is it getting a bit overwhelming now? I'm just throwing that out there, because when we have to start paying more taxes, give up services for citizens, for our kids, yet they keep on giving the services to the illegals, maybe at some point in time, some of the sanctuary state advocates will start saying, you know something, we need to do something about this. We've been calling for it for a long time and understand what it's doing to folks. But I'm just saying that it's not good, and it's not going to stop until we send Kamala Harris to figure out the root cause of what's going on the border. Oh, no, she's going to start dealing. Would they just assign her now? Gun control or something like that? Just throw that out there for you. It's you got to watch out what's going on, because right now it's a mess, and it's coming to a town near you. And I don't know why the governors are sending it, Governor Abbott and others. Why are they sending all of this to California and New York? Do you ever think California or New York are going to sway? I'm just going to throw this out there. If they started sending all of these illegals to Las Vegas, which is maybe a swing state, or Wisconsin, Pennsylvania, do you think it might have more impact on voters and on elections? Just throw that out there for your consideration. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, we've got a lot to chat with you about today. The beginning with a pre-approval. That is a concept that is old. We're not going to talk too much about that one. But what I do want to chat with you about is a whole new concept out there. And this is called buyer's choice. We had pre-qualifications, we had pre-approvals. Those are good. Those were passé. Back in the turn of the century, those were good. Before the pandemic, we had pre-underwrite. And a lot of people hang their hats on pre-underwrite. That means the loan goes to the underwriter. The underwriter says, this is approved. This buyer is approved up to a certain amount of money. And all you need is an appraisal and insurance and title, clear title. Good. And that's great that we have that. But that's pre-pandemic. Now, how about a buyer's choice? And it's how to responsibly overpay for the property you want by saving on interest and monthly payments, saving you money in the long run. That is the new way. We're going to talk about that when we come back as well. You can reach me anytime off air, number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Homeowners over the age of 62 are taking back financial control after retirement with reverse mortgages, and the Siegel Lending Team is here to help you use it to your advantage. Call Ron Siegel with Geneva Financial to receive your free information booklet with no obligation. The booklet answers all your questions, and the best part is, you still own your home. Call Ron Siegel at 1-800-306-1990 or visit ronsiegelradio.com.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender. Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at ronsiegelradio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694552.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry. Calculated from actual locked rates. We don't know APR, points paid, points received. OBMMI just tells us the locked rates with consumers across 42% of all mortgage transactions nationwide. 30-year conforming loans locked yesterday at 7.345. 30-year jumbo loans locked at 7.641. FHA loans, 7.116. USDA loans, that's generally in the no down payment in the rural areas, 7.138. And the best loan on the market, the 30-year VA loan, 6.94. That was up just a hair. And if you want our market commentary, we share that every business day morning as early as we can. rsrmarketminute.com, rsrmarketminute.com. What's going on in the markets today? The 10-year Treasury, it's flat right now. That's an improvement because it was down quite a bit earlier in the session. And let's take a look and see what the S&P 500 is down 44 points. That's a big drop there. Mortgage-backed securities are down 9 basis points, continuing the fall. What's driving all this? Well, we're looking at a lot of numbers that have been coming out. Case-Shiller Home Price Index tracks the change in the value of residential real estate across the U.S. was reported for the month of July. The national index, which covers all 9 U.S. Census divisions, reported a 1% annual gain in July, up from flat in June. That's going to be important in the next segment. We're going to take a look at FHFA, House Price Index, measures home price appreciation on single-family homes with conforming loan limits, increased by 0.8% in July, which was above expectations of 0.5%, and increased 1.4% year over year from the previous revised report of 3.2 to 4.6. New home sales measures signed contracts on new homes decreased by 8.7% in August at a 675,000 unit annualized pace. July's figure was revised higher to 739,000 from the previously reported 714,000 units. The inventory of new homes on the market increased by 1.2% to 436,000, while the median new home price decreased by 1.4% to 430,300. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. A little bit of a workshop for you. Buyer's choice saves money. Yeah, it does. How to responsibly overpay for the property you want by saving on interest and monthly payments. Now, I'm going to tell you right here, right now, I never, ever want you to go into something blind. So you're going to always want to be, if you're going to be doing something like this, you need to know exactly what you're doing and how you're doing it. And I'm going to show you that concept right now because it's it's an important concept on how to do this the right way. Now, I will tell you that there's a lot of people that are talking about concepts like this, and they take it to a certain extent, but they don't go the full. I'm not going to say full Monty, but they go the whole way. They're not showing you everything that needs to be done to get this accomplished. And if it's not done the right way, you can get where high cost and predatory lending violations get triggered, and that can cost you a whole lot of money. Don't want you going there, so I'm going to show you the right way of doing this and going into it with your eyes wide open. So I got a inquiry over the weekend, and it was from an agent, and they have a property available, or they've got a property that they wanted us to market or help market in, I forgot even what city it's in, but it's in Los Angeles County. And we started looking at some of the numbers, and the property is listed at $790,000. What are the problems we have right now? I hear this all day, every day from buyers and from buyers' agents, real estate agents. Well, there's not a lot of inventory on the market, and the payments are too high. How do we solve both problems? Because if there's not a lot of properties on the market, what does that mean? You've got to bid more for the property. So we look at this property, and it's $790,000 is the list price of this property. Now, if you can do 20% down, you're looking at a $632,000 loan amount. And I'm going to throw this at you right now. I'm going to throw it at you that I don't know what interest is going to be at when you go to do your transaction. All I'm going to tell you is that the concept that I'm going to share with you works. Interest could be higher, interest could be lower. I used 8% on this with an APR of 8.261, 30-year fixed rate loan, $5,591.97. Principal, interest, taxes, and insurance. I don't know if there's an HOA on this property or not. 20% down means you're going to need $173,837,000 to close. Now, the suggestion is go to the seller and say, Mr. and Mrs. Seller, can I buy this property from you at $830,000? That's a full price offer plus $40,000. But I need you to use that $40,000 to help me with the payments. Now, we're not doing this on a short-term basis. We're doing this for the entire life of this 30-year loan. So it's $830,000. Now we're looking at $664,000 loan amount. 6.5% interest. You save a full 1.5 on the interest rate. 7.159 is the APR. Now remember, you're not paying, when you do your amortization table, you're not using that 7.159 or the 8.261. You're using 6.5% to figure out your payments. So the payment now drops from $5,591.97 to $5,999.85. You're saving $392 a month by paying $40,000 extra. $392 a month. But Ron, what happens if the appraisal doesn't come in? Okay, well, that does happen. What happens if it doesn't come in at the 790? What happens if it only comes in at 747,000? We call that an appraisal gap program. Keep the loan amount the same, 664,000. Keep the interest rate the same, 6.5%. So when the loan amount and the interest rate are the same, the payment is the same, $5,199.85. But wait, on these last two options, the cash to close dropped to $169,676.52. So by paying more, your down payment and cash to close is less, and your payment is less. You save $392 a month. Think about that process. Now, when you're saving $392 a month, do you think that makes it easier or harder for you to qualify? Of course it's easier to qualify because you're saving money. When you're saving money, it becomes easier to qualify as long as it's done the right way. Again, remember, I told you these will trigger high cost and predatory lending violations if it's not done the right way. There is a way of doing this properly so that it meets the government requirements and the compliance requirements for this. So I just want to show these things to you so you understand that we can help you if you come and give us a call early in the process. If you've gone and talked to your best friend's dog catcher's neighbor and they're also a lender, they may not know how to do these things the right way. And the next step that I'm going to tell you, I want to give you two other numbers on this before I go in and I get to the next part. So over 60 months, 5 years, this is going to save you $83,000. $83,000. Remember, we overpaid by $40,000. So you're saving $83,000 over 60 months. And you got the property you wanted because you gave a full price offer. Over the course of 13 years, and we use 13 because I hear from 9 to 13 years or how long people stay in their property. So I just use 13. This saves almost, well, let's call it $99,000 over 13 years. $99,000 in interest over 13 years. Okay, but you say, Ron, I don't know about this because I'm overpaying for the property. Well, that could be true, but let's see what the break-even point is because of how much we're saving on all of this. Well, if we look at this, because of appreciation, and I didn't even put in the amount of money that we save on the payments, but just because of appreciation, the break even on this comes out to, I think it was about 7 months. 7 months. So you're overpaying. Now, if you waited 7 months, you could actually pay the higher valuation. And what we did is we just looked at what is the forecasted appreciation for this particular street. And this happens to be in Whittier, California. What is the forecasted appreciation for Whittier, California for the next year, 5 years? We also look back historically to see what that's been. So we know we got a 7 month break even. Think about that concept. You actually get the property you want, a lower payment, a lower interest rate, and your break even is 7 months. You might be searching for a new house for 7 months. That's why we call this the buyer's choice. Save money. How to responsibly overpay for the property you want by saving on interest and monthly payments. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, got a lot still to go over and chat with you about. Talking about the pre-approval, we'll talk about that one. People want less expensive homes and builders are responding. We'll try to get that in. Tips for improving your credit score. The types of credit accounts in your credit report, all that and more. Reach me anytime. Off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694552.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at ronsiegelradio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. I'm trying to find my report, beginning with the pre-approval, real estate, beginning with the pre-approval. If you're looking to buy a home this fall, there are a few things you need to know. Affordability is tight with today's mortgage rates and rising home prices. At the same time, there's a limited number of homes on the market right now, and that's creating some competition among buyers. If you're strategic, there are ways to navigate these waters. The first thing you want to do is get pre-approved and then pre-underwritten. That way you'll know your numbers and you can set yourself up for success from the start of your home search. What pre-approval, pre-underwrite does for you, to understand why it's such an important step, you need to know what pre-approval is. As part of the home buying process, the lender looks at your finances to determine what they'd be willing to loan you. From there, your lender will give you a pre-approval letter to help you know how much money you can borrow. Freddie Mac explains it like this, quote, "A pre-approval is an indication from your lender that they're willing to lend you a certain amount of money to buy your future home. Keep in mind that the loan amount in the pre-approval letter is the lender's maximum offer. Ultimately, you should only borrow an amount you're comfortable with repaying," unquote. Basically, pre-approval gives you critical information about the home buying process that'll help you understand how much you may be able to borrow. Why does this help you? Especially today, with higher mortgage rates and home prices impacting affordability for many buyers right now, a solid understanding of your numbers is even more important so you can truly wrap your head around your options. Pre-approval helps show sellers you're a serious buyer. Let's face it, there are more buyers looking to buy than there are homes available for sale, and that imbalance is creating some competition among home buyers. That means you could see yourself in a multiple offer scenario when you make an offer on a home. But getting pre-approved for a mortgage can help you stand out from other home buyers or hopeful buyers. As an article from the Wall Street Journal says, quote, "If you plan to use a mortgage for your home purchase, pre-approval and ultimately pre-underwrite, and then the buyer's choice should be among the first steps in your search process. Not only can getting pre-approved help you zero in on the right price range, but it can give you a leg up on other buyers too. Pre-approval shows the seller you're a serious buyer that's already undergone a credit and financial check, making it more likely that the sale will move forward without unexpected delays or financial issues. Bottom line, getting pre-approved is an important first step when you're buying a home. The more prepared you are, the better chance you have of getting the home you want. Connect with a trusted lender so you have the tools you need to purchase a home in today's market. That's the real-time real estate segment brought to you by rsrmoney.com, rsrmoney.com. Let's see if we can get in. I've been trying to do this one for the better part of a week now. Your Credit Matters, brought to you by creditsanitizer.com. You have a credit report and it's wrong. What are you doing about it? Tips for improving your credit, the type of credit accounts in your credit report. We may have highlighted this a little bit, but I want to give you this full story so you can improve your credit scores. There are 5 main factors that make up your credit score: the amount of debt you owe, your payment history, new credit inquiries, length of credit history, and credit mix. Credit mix, which is how diversified your credit accounts are, makes up about 10% of your credit score, which can make a big difference when you're trying to boost your score. What does credit mix mean? Basically, credit scoring models want to see that you can manage different types of financing, most notably revolving accounts such as a credit card, and installment accounts such as a mortgage or auto loan. Why does your mix of accounts matter? Credit bureaus have determined that the types of accounts you have is predictive of your future credit risk. This means that consumers with the strongest credit scores tend to have a mix of accounts. If your goal is to build or maintain great credit, you'll want to get and keep different types of credit accounts. One reason that lenders look at credit mix is to make sure that you can be responsible with multiple types of credit. Maybe you're great at paying your mortgage, but get a little sloppy when it comes to keeping your credit cards current. Showing that you can handle different types of credit and multiple credit accounts at once indicates financial responsibility to potential lenders. Don't forget rsrccpayment.com, rsrccpayment.com. That'll help you get that credit cards paid properly for FICO scoring purposes and not worry about forgetting. What's an installment account? Installment accounts are those that have a fixed payment for a fixed period of time. You're not required to pay the loan in full each month. Instead, you make a payment that is the same every month until the loan is paid in full. Lenders charge you an annual percentage rate, also known as APR, and this is how they make money. Here are a few different types of installment accounts to consider. Auto loans. Auto loans are issued by a bank, credit union, or a company that specializes in automobile lending. These accounts are generally paid off over 48 to 60 months, but shorter and longer terms are available. Mortgage loans are issued by a bank or a credit union or company that specializes in mortgage lending. These accounts require the most amount of paperwork during the application process, and a good credit score can help you secure a lower interest rate. Because mortgage loans can span up to 30 years, a lower interest rate can save you a lot of money over time. Student loans. These loans are used to pay for college-related expenses such as tuition, room and board. Student loans are a unique type of loan because most students are taking classes and not working full-time jobs. As such, the repayment of student loan generally goes through a process called deferment. Deferment allows a student to postpone their payments until several months after they have graduated or stopped going to school. This gives them the opportunity to secure employment before starting to pay back the loan. Home equity loans. A home equity loan is a fixed amount of money that you borrow against your home's equity. Once you take out that loan, your payment is the same for the duration of the payback period. These are not the same as home equity line of credit, which is actually a revolving account. Personal loans are generic installment loans that you can take out for many reasons. Depending on the reason, they often do not require collateral. You can get a personal loan from online lenders or from a bank or credit union. Credit builder loans. Credit builder loans are offered by some financial institutions. You put some money down in a savings account and pay yourself back. Once it's paid back, you can access the savings that you put in. Additionally, you build up a small amount of interest from keeping the money in a savings account. So what's a revolving account? Revolving accounts are those that have a different payment each month depending upon your current balance. You're not required to pay these accounts in full each month. You have the option to revolve some of the balance to the following month. Lenders charge you interest on the amount you revolve. Credit cards issued by a bank, credit union, or other financial institution, financial services company. These are accounts backed by a major payment network like Visa, MasterCard, or American Express. These accounts are extremely common because almost all banks and credit unions are able to issue them to their customers. Credit cards issued by retail stores. These are accounts that are issued by stores where you like to shop. These cards are a little different than the previous type in that you can only use the card at the store that issued it. Credit cards issued by an oil company. These are accounts that are issued by a petroleum company. As with retail store accounts, these cards can only be used at specific locations, almost always a gas station. Some examples: Texaco, Chevron. It's a Techron Advantage card, Exxon Mobil Smart Card, Shell Card, BP Credit Card. And then the home equity lines of credit, HELOCs, let you tap into the equity of your home. These loans are generally easy to obtain from most reputable banks and credit unions. Since these loans allow you to access a portion of your home's equity, these work similarly to other revolving lines of credit where the payment is determined by the balance and interest rate of the account. What is an open account? Also referred to as open credit. Open accounts are a hybrid of installment and revolving credit. The payment is not the same each month and is usually due in full at the end of each billing cycle. The consumer satisfies financial responsibility for the account when the bill is paid in full each month. The cycle can go on as long as the consumer has an account with the servicer provided. An account with a utility company is one example of open credit. A customer with an account for gas or electric service, for example, doesn't know what their payment will be each month, but is responsible for paying in full unless other arrangements are made. Charge cards are another example of open accounts. They're similar to credit cards, but you're expected to pay the balance off in full by the end of the month. So what is a trade line? Trade line is a catch for all credit accounts that appear on your credit reports. In other words, every single account on your credit file will fall into one of the categories above: revolving, installment, or open. And all of those accounts are trade lines. Once a trade line is added to your credit report, it will affect your credit score. You'll want to make sure you understand what is on your credit reports and ensure you're paying off your credit accounts on time, every time. How can you earn the maximum points for the types of accounts category? Easy for me to say. Before you try to make any changes, be sure you have checked your credit score from cleanall3.com. See whether this category is bringing your scores down. If it's not, don't worry about it. But if it is, you may want to consider the following strategies. Get an installment loan. If you don't have an installment loan reported on your credit reports, consider whether it makes sense to get one. If you're going to borrow money anyway, or if you want to consolidate higher rate credit card debt, a personal installment loan may be helpful here. Another strategy is to get a low rate car loan and then pay it off as quickly as you can. Apply for a credit card. If you don't have any credit cards that are currently open and active, rsrccpayment.com tells you how to keep them active. Consider getting one. A credit card that's paid on time, has a low or no balance, can be a very valuable trade line. If your credit scores are poor, you may need to consider a secured credit card to get started. Keep in mind that applying for a new credit can make your score go down a few points as it increases your hard inquiries, but this might be an acceptable trade-off if the boost you get from better credit diversify makes up for it. Easy for me to say. Whew. Remember, you don't want to take on financing you don't actually need, or more importantly, won't be able to repay just to beef up your credit mix. The best way to score big points in this category is to add installment, revolving, and open accounts to your credit file organically over time. As you add new loans, be sure to keep track of due dates and watch your debt levels. Remember, you still want to keep your payment history and your credit utilization as positive as possible. If you want to get more information on these things, give me a call, 800-306-1990, 800-306-1990. That's your Credit Matters segment, brought to you by creditsanitizer.com. You have a credit report and it's wrong. What are you doing about it? Credit Sanitizer has these solutions for you. And let's see, when we come back, people want less expensive homes and builders are responding. We're going to talk about that one. And about 11,000 houses are going to sell today. We'll talk about that as well. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender. Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Real-time real estate segment brought to you by rsrmoney.com, rsrmoney.com. People want less expensive homes, and builders are responding. That is the subject of this real-time real estate segment. In today's housing market, there are two main affordability challenges impacting buyers: mortgage rates that are higher than they've been the past couple of years, and rising home prices caused by low inventory. To overcome those challenges, many people are working with their agents to find less expensive homes, and with newly built homes making up a historically large percentage of the total available inventory today, that search often includes brand new homes. People are spending less on newly built homes. If you're watching us on RonSiegelRadio.tv, any of the socials, or ABC News and Talk AM 1490 video feed, you're seeing a graph. It's from Census to show in June more of the newly built home sales in this country were in lower price ranges than in 2022. That's why the median home sales prices are dropping, is because of the mix of properties being sold, not the price of properties being sold. Last year, only 58% of newly built home sales were less than $500,000. This June, that number was up 65%. This means more people are buying less expensive newly built homes right now, while affordability remains a challenge. Builders are offering lower cost options. Builders have picked up this trend and are reacting accordingly. George Radiu, chief economist at Keeping Current Matters, explains, quote, builders are also responding to this shift by bringing slightly smaller homes to market in an effort to meet lower price points, unquote. New data from the census further confirms this pattern. It shows the median sales price of newly built homes has dipped down in recent months. And again, there's a chart on your screen if you're watching us on RonSiegelRadio.tv, any of our socials, the ABC News and Talk AM 1490 video feed. Michaela Arroyo, director of New Home Trends Institute at John Burns Real Estate Consulting, says the builders who are most responsive to this trend are forming pathways to home ownership. Quote, it is creating opportunities for people to build to affordable and entry-level home in an area. If you get that size down, that automatically will make it more affordable home. Builders are decreasing size. The most are probably the ones that try to build more of an affordable product, unquote. How an agent can help? Builders producing smaller, less expensive, newly built homes give you more affordable options at a time when that's really needed. If you're hoping to buy a home soon, partner with a local real estate agent to find out what's available in your area. Give me a call at 800-306-1990. I am happy to put you in touch with one. Bottom line, if you're having a hard time finding a home you like in your budget, again, give me a call, 800-306-1990. You need a real estate professional who knows all about the latest inventory in the area, including homes still under construction or just built. That way you have an expert on your side who can provide information on builder reputations, builder contracts, and negotiations and more to help with the building process. That is the real-time real estate segment brought to you by rsrmoney.com, rsrmoney.com. I don't know, do we have time for another real-time real estate, Josh? Yeah, okay, we'll get another one in here. Let's see, I always like talking about this one. 11,000 houses will sell today. That's the subject of today's real-time real estate segment brought to you by rsrmoney.com. Some homeowners have been waiting for months to put their houses on the market because they don't think people are buying homes right now. If that's you, know that even though the housing market has slowed compared to the frenzy of a couple years ago, it is not at a standstill. Contrary to what you may believe, buyers are still actively and plenty of homes are buyers are active and plenty of homes are selling right now, according to the National Association of Realtors, NAR. Based on the pace of sales right now, just over 4 million homes will sell this year. With some simple math, let's break down what that really means for you. 4.16 million homes divided by 365 days in a year equals 397,000 houses sell each day. 11,397 divided by 24 hours in a day, 475 houses sell per hour. Divide that by 60 minutes, 8 houses sell every minute. So on average, about 11,000 homes sell each day in this country. A real estate expert can give you more information about how many houses are being sold in your area, the amazing advantages that sellers are experiencing right now, and the most important things buyers are searching for in your area. Together, you'll use this knowledge to shape how you market your house based on local trends. Bottom line, if you've been waiting to sell because you don't think there are buyers out there, know today's market is active. Every day you wait around, 11,000 other homeowners are selling. In the time it took you to read this, 8 homes sold. When you're ready to sell, give me a call at 800-306-1990, 800-306-1990. That's the Real-Time Real Estate segment brought to you by rsrmoney.com, rsrmoney.com. We're going to get caught up today because I'm going to give you another Real-Time Real Estate segment. I think this is a short one, so hopefully it'll fit. Brought to you by rsrmoney.com, rsrmoney.com. The return of normal seasonality for home price appreciation. If you're thinking of making a move, one of the biggest questions you have right now is probably what's happening with home prices. Despite what you may be hearing in the news, nationally, home prices are not falling. It's just that price growth is beginning to normalize. Here's the context you need to really understand the trend. In the housing market, there are predictable ebbs and flows that happen each year. It's called seasonality. Spring is the peak home buying season when the market is most active. That activity is typically still strong in the summer, but begins to wane as the cooler months approach. Home prices follow along with seasonality because prices appreciate most when something is in high demand. That's why there's a reliable long-term home price trend. If you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 video feed, you're seeing a graph from Case-Shiller that shows typical monthly home price movement from 1973 to 2022, not adjusted, so you can see the seasonality. And that's a 49-year average of monthly price movement. As the data shows, at the beginning of the year, home prices grow, but not as much as they do in the spring and summer markets. That's because the market is less active in January and February, since fewer people move in the cooler months. As the market transitions into the peak home buying season in the spring, activity ramps up and home prices go up a lot more in response. Then as fall and winter approach, activity eases again, price growth slows, but still typically appreciates. After several unusual unicorn years, today's higher mortgage rates helped usher in the first signs of the return of seasonality. As Selma Hepp, chief economist, CoreLogic, explains, quote, high mortgage rates have slowed additional price surges with monthly increases returning to normal seasonal averages. In other words, home prices are still growing but are in line with historic seasonal expectations, unquote. Why is this so important to understand? In the coming months, you're going to see the media talk more about home prices in their coverage. You'll likely see industry terms like appreciation when prices increase, deceleration of appreciation, which prices continue to appreciate but at a slower or more moderate pace, depreciation, when prices decrease. Don't let the terminology confuse you or let any misleading headlines cause any unnecessary fear. The rapid pace of home price growth the market saw in recent years was unsustainable. It had to slow down at some point, and that's what we're starting to see, deceleration of appreciation, not depreciation. Remember, it's normal to see home price growth slow down as the years goes on, and that definitely doesn't mean home prices are falling. They're just rising at a more moderate pace. Bottom line, while the headlines are generating fear and confusion on what's happening with home prices, the truth is simple. Home price appreciation is returning to normal seasonality. If you have questions about the local area, give me a call, 800-306-1990, 800-306-1990. That's the real-time real estate segment brought to you by rsrmoney.com. And as always, we ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. Big thanks to Josh and Sean for engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.